Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading here. This is another weekly watch list video. Last week in our video, we basically hit it out of the park with our charts to watch, our picks. Really worked out well. So before we start this video, hit the thumbs up. If you're new, consider subscribing. So we're going to start this video like we do every weekly watch list video with the earnings for the week. It's right there up on your screen, so you guys can take a look at that. There's some interesting names here this week that have earnings. I do want to remind you, if you're going to be trading any of these stocks with options, you need to be aware that you're paying a premium to do so, because a lot of times this will give a big move, but you have to pay up for that premium. So understand, if you don't get a very big move in your favor, the IV crush that happens after the earnings, it sucks all the premium out. So you have to realize, you might think, okay, the stock moved in my favor, I should be up. But you open up your platform the next day and you're like break even or down, and you need to realize that that premium is no longer there for you because the earnings, that event already happened. So just be aware of that if you're going to be trading options. I don't usually like to trade options around earnings because you just don't know what they're going to say. You don't know what the guidance is going to be. Okay, now we're going to go into our economic calendar. As always, the economic calendar is very important to know if you're trading, if you're swing trading, or even day trading. Just know when those key events are happening. This week, I have one thing on my radar that's going to be super important, and that's on Valentine's Day, Tuesday, February 14th, we have the CPI. This is where it gets interesting because inflation is coming on down. The market already has that priced in. I feel like a lot of good news is already priced into the market right now. So really big beats on CPI, I don't really know how much of an effect that's really going to have on the overall market, because the market is already expecting good inflation numbers. So you need to be aware of market structure. And right now, I feel like a lot of that is all baked in to the market. Now that has me, a little bit bearish going forward. I think the market got a little bit ahead of itself, out of the gate in January. And we started to pull on back just a little bit. So we'll see what that has to say on Tuesday. Then on Wednesday, you have retail sales, and you have a lot more economic data coming out. How's the economy doing? And that's going to start to be, what everybody's going to focus on. Because if inflation is coming down, what we're going to have to see is that recession fears start to creep back in. That really has gone away in the first, month and a half here of the year. You don't hear it as much as you used to. So that tends to sneak up. Now, just because people call for a recession, it doesn't mean it has to happen, right? But when everybody's saying when it's going to happen, like they were saying in the first half of the year, most likely that's not going to be the outcome. It's just the way things happen. So, if it does happen and we do see a really big economic slowdown, we are seeing a lot of, big job cuts going on, just basically with every company. That's going to start to affect the economy. There is no doubt that that's going to affect the economy, but it has not been in the stock prices yet, right? So you have that economic data there, more Thursday and on Friday. So that's the economic calendar for the week. Going over to those sector performances on the week. This was called out perfectly in our last weekly watch this video. Energy was going to have a good week. and it outperformed huge. So that was a great call, basically just taken by looking at the technicals on the charts. That's how we came up with this, that energy was going to be an outperformer. Once these got a little too ahead of itself, like technology, right? Technology, 1 month relative performance up 10%. The RSI on a lot of tech stocks, the RSI on the market, that relative strength index, it was just way overbought. We were due for a pullback. So technology was up the most, and we saw what was winning last year was actually down the most. What I think we're going to see now going forward is a little bit of a shift. So those stocks that were up so much in January that still do not make any money, the garbage that was down so much last year and had a big run in January, those will start to roll over. And then we'll start to pick up those defensive plays again. That's my opinion. And, just because it's my opinion doesn't mean it has to happen. It's just what I believe is going to happen. All right, so now we have to take a look at the yields, because the 10-year yield since February has just gone basically straight up, a very big amount. Now, you can see here, I have this yellow line on the screen at the top here. That's the NASDAQ market. That's up year to date 12%, while the bond yields are down 4%. These are inversely correlated. So when one is going up, the other one goes down. You can see here, every time it pulls back, you get a spike in the NASDAQ. Well, what is going on now is the 10-year is starting to make higher highs and higher lows, and the NASDAQ is starting to pull back. So watch those yields. If these yields keep going up, the market will most likely continue to come down. So that's just something to be aware of there. All right. Now we're going over to our compass, the SPY. This is the S&P 500 ETF. That's all this is. It's a great gauge, for the overall market. And it's what a lot of people look at to see direction and to see where we are, where we may be going. So last week, during our video, this was resistance. We were calling for a pullback. We saw a pullback, but we are still on the SPY very much in an uptrend, okay? We can even pull back all the way into the 390s and still technically be in an uptrend. We just got a little too extended and we came right into resistance. You can see here, it was support, then turned resistance. It was resistance, broke out, and then resistance again. And that came right back into that level. And it was resistance. It was also up a lot. So that's a normal pullback. So right now, this on the SPY, on the S&P 500, this is a simple, normal pullback. All right. You can even take a look here, and I'm just going to draw this out. You even have this trend line here, and we can actually just move this down to where it hits this. So I'm just going to make this a little bit thicker so you guys can see. So right now you have this trend line. You're in a very steep uptrend. Even if this trend breaks, right, you still have all this room to go to still look for a bounce. And then you'll have the 50, you'll have the 200 SMA. So, it got a little steep. Now, what this could be, and I'm just going to draw this out here for you guys, this could technically be a nice bull flag. Now, the flagpole would be, like on this side to look more like a flag. But you can see here, this is that pullback. And then this would have been a very good entry here if this is going to continue, ripping up. I personally do not think that's going to happen. We may go back up here and test, but I think ultimately it's going to be some choppy trading. And I think we will see a pullback eventually to this bottom trend line. So there's a ways to go there, as far as a pullback goes. And we would need, the rest of the market to pull on back as well, like the Qs. Last week, the RSI was very overbought. It was very simple to predict what was going to happen this week. And that's why we got into puts on Apple, on the Qs. We were shorting the market here because we were in this resistance, right? You have overhead supply, and then, your RSI is way overbought. When it's overbought like that, that was the highest level in over a year, you will see a pullback. Just keep an eye on that RSI. And it works for the other way too. When something is way too oversold, you'll get a bounce. It's the way the markets go. They go in waves. So that's what we see now. What is looking very similar to me, I'm going to go back to the SPY here. What's looking similar to me with this higher high right here, right? You see how we made a higher high than back here, and we have this pattern? The same thing happened here, right? When we broke on up, when we broke down from this consolidation, we did make a higher high right here. We made a higher high than back here. So at the time, this section right here looked very similar to this. A nice bottoming out, some higher lows setting up. We made a higher high. Maybe we go and retest the all-time highs here. We didn't. We ended up coming down and making a lower low. So just because we made a higher high here does not mean that we cannot come back down and at least retest this 380 area. This 380 area, there was a lot of volume that took place over here. So I would expect if we did pull back to this area that we would see some support. So I don't know when that will happen, but that's just what I think is going to be setting up here. And, that's on the SPY. So on the Qs, it's, a very similar situation. You have that breakdown here, you have a higher high right here, you have the breakdown here, and you have a higher high. But then it continued to go down lower. All right. So that's just where we're at right now. On the Qs, we could look at the weekly chart here. That candle there looks like we're about to continue more downside. You get some nice moves up. We saw from the bottom 20% up, and then you come back down. Same thing happened back here. This is exactly what I'm talking about. So to me, I think that we will continue to go down, maybe retest these levels here, around 280 on the Qs. We'll see what happens. 260 would be the lows. We'll just have to wait and see. But a lot of good news is already baked into the market. You've got to realize that. The Dow, looking at this on the daily chart, it's still in this pattern. We're just chopping around right here. Now, when a market is chopping around in a range like that, I have to say it's very, very difficult to trade. It's very tough to take trades when a market is doing this, because every time you think you're going to get a breakout, you get a false breakout, and then it pulls on back, and you could just get chopped out, during the day, from the lows to the highs. Breaks down a little bit lower. You think it's going to continue down, and then it goes back up. So it's very choppy trading at the moment until a direction presents itself. Like in January, a very nice direction. Okay, that was easy to trade. And then it got a little more complicated. All right. When we pulled on back, this is the IWM, which is actually looking really strong to me. It's coming back down to support. We should see this act as support. This is all those low cap stocks that are actually have pretty decent PEs. So the IWM, we'll see if we hold up here. If we do break down, then maybe you have some room down there to the 50 or the 200 moving average. So that's the IWM, DIA. So in our picks from last week, I mean, we really did very well. We had the XLE Energy long. We had Uber, the bearish to bullish reversal, a huge move after earnings. That was a good call. mRNA, this moved down 10 points, a really nice looking head and shoulders pattern that we called out. That worked well. Gold is at support. This is something that I'm still going to be looking at this week. And Apple, this is what I got into puts when I said here we were very overbought on the RSI. I think we may see a pullback here, and we did. It went from 158 all the way back to 149. These are very good moves. Those were good call outs. So, for this week, I'm going to continue to monitor those. And I'm also going to be monitoring Airbnb. This has earnings. I feel like this stock is ready to roll over. And this has a long way to go down. So we'll have to see those earnings. This is one of those stocks that just got way ahead of itself in January. A beaten down stock the year before, had a huge rally to 120, could not break out, and then rolled over big time. It would have been nice to get in for this breakdown here out of consolidation on Friday. That would have been a good move. But we're going to keep watching it. Like I said, it's got earnings this week on Tuesday. So that's going to be interesting to see how it responds on earnings. It doesn't have a good track record after earnings. I mean, you can see here, really big pullbacks. All right. So that's it, guys. Remember to hit the thumbs up for the video, and I'll see you back on the next one. Take care.